It is little surprise that the events in Catalonia have seen a sell-off in the euro. The implications of Catalonian secessionism, if it ever were to happen, are so complex that the market reaction to Sunday's news footage can be excused, at least in the short term. The longer-term view is that Catalonia is the latest in a series of threats this year to the euro and European Union stability. We've had the Dutch, French and German elections, Brexit and the rise of Five Star in Italy, all preceding Catalonia. Now, some of these threats have either been seen off or at least neutralised. True, in the case of Five Star and Catalonia, it's too soon to assess the risk, while Germany's election outcome raises more questions than answers. Indeed, Goldman Sachs says that perceptions about the European political landscape were arguably too rosy since the French election, and so investors should set their euro-dollar sights lower. So, the knee-jerk reaction to Catalonia may be negative. But the investor mood is different to the start of the year, when Marine Le Pen's election chances was the dominant preoccupation. The change in mood is not just because Mrs. Le Pen was defeated, it is also down to resurgent eurozone economy and the European Central Bank edging towards tapering. As a result, the euro has risen this year by 11.5% against the dollar and by more than 6% on a trade-weighted basis. A year ago, Sunday's scenes in Catalonia might have shaken market confidence. Instead, the eurozone economy's strength means Catalonia is relegated to an event investors are doing no more than noting. European asset manager Amundi, for example, says events in Catalonia do not affect Europe's recovery and economic solidity. Of course, things might be different if these events were taking place against a weaker economic backdrop. But that's hypothetical. Investors prefer only to see what is in front of them, and right now they have in their sights the date of October the 26th and the next ECB meeting, now shaping up to be one of the biggest market events of the year.